Hey, it's Rob Weinberg, and on this channel we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time here, go ahead, hit that subscribe button, and don't forget to get notified on all the new content we're putting out every single week. In our whiteboard lesson today, we're going to be discussing co-signing for a mortgage. And this is a really opportune topic because of the run-up in home values lately. We've seen a lot of people need to actually go with a co-signer and get a co-signer on their mortgage in order to afford the home that they're looking to buy. So why would somebody get a co-signer? Well, as I said, the home prices have had a huge run-up lately. We've seen the interest rates increase, so the overall affordability of homes is very, very low right now. What that means is, for most people, especially single people, you've got to have either a very high income or you need to get a co-signer in order to be able to qualify and afford a mortgage in the current real estate market. That's the reason why people are needing a co-signer today. Who is going to be a co-signer? Well, I've seen everybody as co-signers. There's not really a restriction. Most commonly, your co-signers are going to be very close friends, family members, of course, and maybe a significant other. So those are the most common, but I've seen coworkers co-sign for people. I had a client recently that had an old friend from college that co-signed for them now, years and years, actually decades later. So there's not really a restriction about who can co-sign, but what I will say is that you want a good co-sign. Well, obviously the better credit they have, the more it's going to help you in your loan application. Also, somebody that has a strong income with low debt. So I've had people reach out with co-signers before. They have good credit, but they are loaded up to their eyeballs in debt. That's not going to be a good co-signer because, again, the main point of the co-signer is to help expand your affordability. So the less debt that they have and the higher their income is, the better co-signer that person's going to be. What are some of the pros and cons of getting a co-signer on a mortgage? Well, the pros are going to be heightened affordability. You're going to have more flexibility when it comes to affording your new home. Maybe on your own, you could only afford a $300,000 home, but now with a co-signer, you can afford $450,000 or maybe even $500,000 or more, as an example. So that's a huge pro of getting a co-signer, and the reason why most people want or need it. But there's also some very important cons and some negatives around co-signing. So the first negative is going to be that it doesn't live in the home. It's still going to reflect on their credit report. Even if the person co-signing is not the one making the mortgage payment, it's still going to reflect on their credit report as a debt, as an obligation. We'll talk about some creative workarounds for that here in a few minutes. But you need to realize that the major con is going to be that it's going to potentially disqualify or make it difficult for your co-signer to be able to get a new mortgage or really any new debt in their future because they are obligated on that mortgage that they co-signed for you. It doesn't show on the credit report that they were just a co-signer, that they don't live there. It shows as a regular mortgage. Again, we'll talk about some solutions or workarounds here in just a minute. The other important thing that you want to understand when it comes to co-signing a mortgage is the exit strategy. You need to make sure, if you're someone asking for a co-signer, what is your exit strategy? And if you're someone thinking about co-signing, you need to find out from the person you're co-signing for, what's the timeline? What is the exit? And by exit strategy, I mean, how is the co-signer going to get removed from that mortgage? Generally, the co-signing option, unless it's between spouses or, relationships like that, it's going to be something that is going to be short-term, or at least it's meant to be a short-term solution. So the idea is you co-sign, you get into the home, and then a few years later, once the main borrower is more qualified, maybe they have better credit, they have less debt, they have more income, then they can qualify on their own. We can then refinance or restructure that mortgage to take off the co-signer. So that's a common exit strategy. Another one would, of course, be selling the house. So when you sell a property, the mortgage gets paid off. So if you're somebody that has a co-signer, maybe you only plan on keeping this property for a couple of years, the exit strategy there would be to sell the property and pay off the mortgage. Really, the exit strategy is all about how is that mortgage going to be paid off? How is that mortgage going to be refinanced or restructured to get the co-signer off? Because again, these are generally meant to be more short-term type of options. A co-signer doesn't co-sign planning to be on there for 20 or 30 years, generally a couple of years. Something that I do with all my clients up front that are utilizing co-signers is we create that exit strategy up front and we make sure that everybody is aware of it. So we can begin with the end in mind and we can make sure that we plan accordingly to actually adhere to the exit strategy that we put in place. A lot of time that looks like evaluating a refinance 6 to 12 months after buying the property. Sometimes it could be a little longer, just depending on the hurdles that you've had as far as qualifying for a mortgage on your own. Now, the last thing I want to talk about in our whiteboard lesson today is going to be workarounds. So when you're co-signing a mortgage, as we discussed, there's a lot of cons, there's a lot of things that can limit your ability as a co-signer to go out and get your own credit, your own new mortgage, or other types of credit, right? So what are some workarounds for that? Well, there's a 12-month rule that's common in almost all mortgage programs. And what that 12-month rule does is it says that if we can get a 12-month canceled check or bank statement for the person that is making that mortgage payment, then we can exclude that mortgage from your debt to income ratio. Now, this only works after 12 months. It won't work after 11 months or after 7 months. It's got to be a full 12 months. The money has to come out of a bank account that the main borrower has nothing to do with. So the or whoever's making the payment, the other person can't have anything to do with that bank account. I think that's the main thing to understand here. So if your name is Joe Smith and you're making that mortgage payment, the mortgage payment needs to come every month out of the bank account with Joe Smith. It can't be Joe Smith with somebody else who's also obligated on that mortgage. So I know that may sound a little confusing, but the bottom line is the monthly obligation for that mortgage, it needs to come out of a separate bank account for the last 12 months. Then we can show that somebody else was responsible for that mortgage besides the cosigner and exclude that mortgage from the debt ratio when the cosigner is then going to get their own new mortgage or their own new credit, okay? This rule specifically applies to mortgage credit. I can't speak to auto loans, credit cards, or personal loans, but there are several guidelines around this 12-month rule when it comes to mortgage credit and mortgage underwriting guidelines. So that could be the key to having a cosigner co-sign today and still be able to buy their own home in a year or a couple of years, all right? So I hope you found value in today's lesson about co-signing a mortgage. If I can be of assistance to you or someone else that you know, I offer personal one-on-one consultations so we can put together this entire strategy for you and your scenario. You can reach me by call, text, or private message. My direct line is 860-413-3938. As always, I hope that helps, and we'll see you on the next episode.